In this video, traders, we're going to look at how important is pre-market trading. Hey traders, warm welcome to you. Okay, so how important is the pre-market session when trying to formulate an opinion for what the next day or the current opening bell is going, or the current day is going to do from the opening bell? Let's have a look. So most of the time, guys, I've got the spiders up here, 5-minute spiders chart, which is the S&P 500 ETF, just to visually see the pre-market session. Now, if you're trading the futures or if you're trading a spread bet, you're going to see this in a slightly different format, but you get the idea. This is close enough, and the good thing about this is it's shaded so we can see what it's like. So if you look here, the pre-market on this day, which is slightly shaded differently to the actual regular trading hour session, there's not a lot going on, is there? It's up, it's down, it's up, it's down, but we still have kind of got a high level. We still recognize that we've not actually pushed back and closed the gap. So even though it's quiet, even though there's not much gone on, we can still make some assessment, and we can still say this: we haven't filled the gap that we closed here. We've gapped up. We haven't made any real attempt to fill that gap, which it would indicate that sellers don't perceive this as extreme value. We haven't either broke much higher yet, which would indicate that buyers aren't that excited by it yet. They haven't stepped in and got ultra aggressive yet, but equally neither are sellers. Very, very neutral. We have a little bit of resistance, we have a little bit of support. Okay, so that's not much information, but what it does tell us is it does say, okay, we've got a slight bias to bullish, right? Because we've gapped up, we haven't attempted to fill that gap, and we're holding that gap level now. So really, even though it's quite neutral, there is a bullish bias to it because of the fact we haven't filled that gap. We haven't gone back to the prior value level. And so when you're trading the open, you can say, well, I want to see now, have we got an opportunity to go long? Now, sure, you may not catch that initial drive, but you're going to be ready for that kind of bull flag there for a continual drive up higher, whatever it may be. And if it starts to push lower on double bottoms, you might well be aligned thinking, well, you know, buyers have stepped in before or have held this thing, maybe we're going to continue to push up. So very, very loose is this example, but you can see already how you can slightly start to get a feel for what's going on. Let's compare that to this pre-market here. This pre-market's gapped up. Not only that, but at kind of 1 o'clock, when the US starts to wake up and starts to get going, even though the bell's not gone yet, which is 2:30 UK times, why it says 2:30 here, that we start the regular trading hour session, I see some bidding coming in. I would expect that to come on from Europe. The FTSE DAX has been bid up, pushed up, and the pre-market in the S&P 500, the Globex session in the S&P 500, sorry, pre-market in the SPY, Globex in the S&P 500 futures, Dow futures, etc. have all pushed up, but notice they've held. So they've pushed up a good hour before the opening bell and have held. Now this is same kind of thing as before. We have a weight to the buy side. We've got a slight bullish bias, a gap up that's pushed higher, holding at highs for the bell. So we would be prepared and ready for a drive longer off the bell. That would make sense in terms of a continuation of the pricing patterns that we've seen pre-market, right? So we're starting to extrapolate out what we expect might happen based on the price action of the prior session, or the pre-trading hour session. Let me just go and look at something different, like for example, you know, Twitter or Tesla, something like this. I'm trying to find this one on Twitter for you guys. You know, it's not always going to work for you. You know that. I know what. There's a great one on Tesla. It's not always going to work for you. The point is it starts to give you some idea. Now, this pre-market Tesla, there's some news come out on Tesla. It was bearish, it gapped down. When it opened, it was trading a lot lower, significantly lower in fact, but notice how buyers have stepped up and pushed it at the highs for the open. Now, you might say to yourself, well, actually, do you know what, the trend is probably going to continue higher, we're going to push higher, and that would be a fair thesis, right? I would probably think the same thing. I would think, yes, you know what, we've tried to push lower, buyers have perceived it as value, we've pushed up, we've closed at highs, we're in an uptrend with the pre-market session, I'm expecting that to continue. Now don't forget, you still can't ignore things like the gap. So the gap was pretty much filled there, I think, close enough, and then it came lower. So that may be your target was hit, that's all you're expecting, and you know that was fine. But you may well have thought it's going to go higher, in which case you would be stopped out. You can't just completely discard all your risk management, of course, but you start to put a thesis. And even though this news here, I know this news was considered the most bearish news ever, the bears were licking their lips, they thought they had got a jackpot, and while it gapped down, it traded to there in the first kind of 10, 15 minutes, 20 minutes of trade for the after hour session. Everyone just went, wow, you know, we're going to make a fortune. And then they started to get despair as it started to push back up and recover a good $10. So I would then, you can then say, okay, well, this is an unexpected response trade. We've had bearish news, a bearish knee-jerk reaction, but over time the buys have accumulated. So even though you may well have been stopped out on this if you're looking for a buy and this candle's kind of triggered you out, you may still well be looking for buys, and you may still well have framed this and gone, what's 50% of the move, it's about here, where's my blah blah blah, and done all the analysis you need to do. The point is, without that pre-market, you just be flying blind. You just be looking at this saying, I don't know where it's going up, it's going down, is it negative news, it's negative news, you know, and how to position. It just gives you the extra layer of levels to work off, sentiment to work off, and those two things combined give you a little bit of edge going into the morning. Now, a good question that I guess many of you are asking in your head or at the screen is, hey, so what point do you discard the pre-market and start to look at the current trading day? Great question. And I would say after the European sessions close, so about 2 hours in, about 4:30, when it closes, you've got 2 hours worth of trade. I'm going to start now to discard that a little bit and take more weight onto the actual levels and price action we've seen in the first 2 hours. And really, when we get 3-4 hours on, definitely going to be discarding it. But it helps you, guide you in those first 2 hours to see what the pre-market's done, to see that price action, to see that sentiment, and to see exactly potentially how you might want to position for that lucrative opening hour. All right, guys, take care. See you in the next one. Keep your risk manager, whatever you're up to. Bye bye.